Hey guys, Jason Balin at Hard Money Bankers and Chris Kershisnik from ReMax, one of the top real estate agents here in the DMV, DC, Maryland, Virginia area. Wanted to get Chris on real quick just to talk about market conditions. There's a lot of stuff going back and forth. Is it the right time to buy? Is it the right time to sell? Is it the right time to flip a property? Is it the right time to buy a rental property? So Chris, give us a pulse of like what you see out there related to current market conditions?
Okay. First, Jason, thanks for having me on. I appreciate always being a guest for
Absolutely.
you guys over at Hard Money. Love you guys to death. I'd say the market conditions right now, probably the third or fourth really healthy spring market where we're ahead of the game. When we started in this business, spring market didn't start till late April, early May, and it seems like things are jumping, like right after Valentine's Day for me. And this year is really no different, and which is surprising because we've had rates go up for, we've had consistent rate raises for a while, all year and part of last year. So that's a good sign in the market.
So when you say it's kind of like booming and things are good and it's a good spring market, who's it better for, a seller or for a buyer? Is there more inventory?
Okay. It is a seller's market. If your property shows well, particularly if your property shows extremely well, and you price it where it should be, you could take a property that shows very well, and be a little bit ambitious with the price, I would say, and still expect to go under contract in under 10 days. And in many cases, multiple offers, especially in, the medium to lower price ranges. If you're in Montgomery County, if you're in Howard County, even Frederick County, if you're under 5, it's a very, very heavy seller's market, and buyers can expect to be in multiple offers a lot.
Yeah, that's what my next thing was going to be related to. Is this the case for low, medium, and high properties? Is it just median housing prices? I mean, I know that obviously the median housing neighborhoods, areas typically is the majority of the buyer pool. And like you said, probably under $500,000. That's probably where that is. Is that not the case in like whatever the $1 million properties in McLean or Potomac or Western Howard County or Northern Baltimore County?
Well, I can still tell you, like, I've had my share of high-end properties this spring in Montgomery County, in Loudoun County. And both of them they showed extremely well. One of them was just under $1 million, and we had to put an offer in right away. I mean, we needed a strong offer right away because it was a very competitive market. The Loudoun County one was a little bit different. They kind of overpriced it, and I'd say we got good value for it. But I'd still say, even in those higher price ranges, if you show well, and it's marketed well, you shouldn't have much of a problem. And you'll know in 30 days for any price range. I would say the lower price ranges, within 20 days, you should be under contract, or else you're priced wrong. And in the higher range, if you're 30 days on the market, you're priced wrong.
Yeah. So related to real estate and investors that flip houses, I think we've seen something similar. Houses are selling quick. Obviously the nice ones, the nice renovated ones. And the sellers are, a few years, maybe not even a few years ago, I would say probably like 2 years ago, unless it was done really, really nice, it was hard to sell for top dollar. But it seems like right now, the hard part is getting deals in the door for an investor. It's hard to find them at the numbers that work. But if they do get them at the numbers that work and they do a nice rehab, they could sell, very quick, which is good. What about condos? I know we have some borrowers that we work with that do condos in DC, and condos in general have always scared me, just because obviously, the one thing we all know is, just like taxes, condo fees aren't ever going down anytime soon. So the fees associated with that, obviously the older the condo, the higher the condo association fees, things like that. and typically condos are the first ones to go. Have condos kind of been still going strong? Maybe the what are they called? The 1 to 4 story ones,
like the garden
style ones. Are they still kind of going strong compared to other stuff?
Yeah, I mean, there's a decent market for those. What I'm kind of seeing is a lot of interest in the, like take for instance, all the development going up and down the Pike, Rockville Pike, like your old stomping grounds, like that. Those are not garden levels, but those are moving, and that's because people want to have, the grocery store, the restaurant, all of that stuff, like on the first floor of your condo unit, or you want to be like, you want 5 different, 6 different, 10 different places to eat on a given weeknight. Whereas, take for instance, the condos up in King Farm or, the garden levels in Falls Grove or something. And I'm just using that Rockville market as an example, but they're not as desired. They're not as desired. It's still a fine home. Yeah. It's still, I wouldn't tell anybody not to put a contract on it. But I mean, where I see like the buyers are turning their attention to, it's those town center type scenarios, or like how the Pike is building out. So,
yeah, that's interesting because I don't know what some of those values of those high risers or those higher end condos are over there, but I know they got to be expensive, and I know they also got to have some big condo fees because there's elevators and other stuff on it. And typically those garden style condos really don't have that high of a condo fee because there's less maintenance and things like that. So that's interesting.
Yeah.
So, and I know you don't have kind of a magic wand. I wish you did. Wish I did. But what's kind of your short term, next year, 18 months approach? What's your next longer term approach related to where the market's going?
Okay. So a lot of people, you're hearing people say like, oh, we're in a crazy market. This is, escalation clauses. This is what happened during the crash. So you and I both cut our teeth.
That's right.
In business in that time. So I remember, 2004, 2005 in our office, and there was escalation clauses like 50,000 over asking price. I think the big difference here is how finance and how the market has responded to to this uptick. Back then, there was no income, no verification. It was interest-only loans. They were fixing the game to keep the supply of buyers and borrowers fresh. Okay, we're not seeing that now. In fact, the market's gone up. You've seen prices rise, and then we've seen rates rise. So I think that's, in my opinion, it's healthy. I don't think rates have gone up too much because the demand is still there. And if you look at it, it hasn't been, it hasn't shocked the system or anything. So we're good as far as the supply of buyers. And I anticipate a good, steady market for the next year until rates go up dramatically. And I don't think we're going to see that. I think we're just going to see decent continued growth. So.
Yeah, I think I'd have to agree with that. And you're right. It's still hard to get financing. I mean, if you're qualified, you can get financing for a loan. If you're worthy to get a loan for a property, you got good credit, you got decent assets, you got stable income, someone like that should get a loan. And if that's the case, and if that continues to be the case, then I think it's fine. And keep in mind, obviously we know that there's a big difference between getting an interest rate at 5% and getting an interest rate at 6%, right? There's a difference in payment. It just is. So on $100,000, whatever, that could be, a few $100s a month. So the purchasing power changes on that. But as long as that kind of happens, not like 5% to 8%, and it kind of ticks up, down like that, there's only so much, you're given warning before, and you have time to get in, you got time to get out. It's not the end of the world either way. And so no, that's all really good insight, Chris. I certainly appreciate it. What's your best contact information?
Well, I'm on Facebook a lot. You can look out for me on Facebook. I know my last name's complicated, but it's Chris Kershisnik, Kershisnik. My website is chrisk-homes.com. My cell phone is 240-426-9520.
Thanks. Certainly appreciate it.
Thank you guys so much. Love to see you guys doing all those good things. And I just wish I had more time to go out and go to your events.
Thanks.